What's up guys, Misha here from Beyond the Huddle and welcome to another trade breakdown. And today we're going to be breaking down a trade that we took this morning during the New York session. It was a long position that we took on BTCUSD. You guys can see the entry, the exit, and the profit right here. You guys can even see the lot size. And the trade was a 3.27 R trade. Now our goal is 4 R per week, and this was actually pretty close to that target, and that is one of the reasons why we were okay with taking profits where we did. So now that we've gone over the overview of the trade, you guys can see where the trade was taken. Now let's go ahead and break down exactly why we actually took this trade. So first off, one of the things that I was looking at, as you guys already know here at Beyond the Huddle, we like to trade when others are wrong. So we're looking for a false breakout. We're looking for people to get on the wrong side of the market. And what we do is we use order flow to confirm that there was in fact a bunch of people trapped on the wrong side, and we try to take advantage of their mistake, because we know that once they are in a losing position, they cannot hold that position forever. They are going to have to exit that position, or should I say they're going to have to puke the position. And when that happens, that fuels the price in the opposite direction. So here, what I was looking at, and again, I'm using a bunch of different indicators on the chart right here. These are all BTH indicators. I'm using the market structure indicator, the session indicator, the ADR indicator, and the previous highs and lows with the opens indicator right here. So first off, you guys will notice that right after the European session, which is the blue box, the red box is the Asian session, the blue one is the European one. And once the European one stops right here, that's the beginning of the New York session, or at the very least when I like to start trading, which is 8 o'clock in the morning. So as you guys can see right here, at around 8 o'clock in the morning, we can see that price tried to make a new low on the day, going below not only the Asian low, but also the European session low. And you guys can see it. Let me go to the 30 minutes so you guys can see it better. You guys can see that price tried to go below that low and ended up rejecting. So once that happens, the first thing I'm looking at is my order flow, which I go into my order flow software, which I'm not going to show in this specific video. This is reserved for our order flow day trading course. But once I go into my order flow software, I start looking for trap traders, trap sellers specifically, because we're looking at a false breakout to the downside here. Now, why am I looking for that? The reason is because I know that once you make a new low on the day, there's going to be a lot of traders that are trying to catch the breakout and a continuation to the downside. And if that does not happen, these traders are going to be trapped and the market is likely to reverse the other way, which is what ended up happening today, right? So once I saw this right here, I went into my order flow. I did see that there were trap traders, but the order flow did not look exactly as I would have liked it to look, which is why we went very light on the risk on this trade. We did not risk, or we didn't use our normal risk on this specific trade. We went about 4 times less than I would usually risk on a single position because of the way the order flow looked. So that's what I was seeing right here. Now, another thing at the same time that this was happening on Bitcoin, if I switch over to Ethereum, you guys can see that at the beginning of the New York session at this 8 o'clock time, we were nowhere near making a new low on the day on Ethereum. So that kind of gave me a little bit of confidence to still take the trade, even though the order flow did not look perfect. So once that happens, once I have the order flow confirmation, the next thing I'm looking for is my structure confirmation, and I do that on a 5-minute time frame. So what I'm going to do is I'm going to go ahead and use the replay tool right here, and we are going to go back to this time right there. So, and we're going to go to a 5-minute time frame. So once I see that the order flow gives me somewhat of a confirmation, the next thing I'm looking for my entry is the structure. And what I'm looking for specifically in terms of structure is I'm looking for that low to be an intermediate term low. So for those of you that don't know what an intermediate or a long-term low is, I will explain it to you. So all these gray circles represent short-term highs and lows, and the triangles represent intermediate term low, intermediate term high, and then the squares represent long-term highs and long-term lows. So an intermediate term low is simply a short-term low with a short-term low to the left and to the right of it, makes this intermediate. And a long-term low is simply a low with a long-term, an intermediate term low to the left and an intermediate term low to the right of it. So at the moment, this was only a short-term low. So I need this to become an intermediate term low for me to be able to get in on the trade. So I'm going to play this and you guys are going to see what happens. And right around here is when this became an intermediate term low. And you guys can see I entered right here at the close of this candle right there. And because of the spread, my entry ended up being up here. But I pulled the trigger right at the close of this candle because that is when this short-term low was formed, which then made this an intermediate term low. Now, my expectation is eventually this will become a long-term low because I believe that this is going to be the low of the day, which is why my stop goes below that low. So I measure from the low, I add the spread, and that is going to be my stop. And the reasoning here is that if this is in fact going to be a bullish day, and we have this intermediate term low right here on a false breakout with the trap traders, with a divergence with Ethereum, then I expect that to be the low of the day, and therefore it should not get taken out if I'm going to be right about that. So you guys can see I got in on the trade right here, and you guys will notice that as soon as I got in, I started to notice that I was in drawdown, or I started getting into drawdown. And the first thing I did once I got into drawdown is I said, okay, what is my assumption here? My assumption is that this low cannot get taken out. So what I did was I pulled my fib from the low to the high of that short-term low, and I was waiting to see if I was going to get a reaction once we went below the 50% equilibrium price point here into the discount, because if that happens, then that confirms that this will in fact hold as a low and will end up being a long-term low. So let's see what happens. As you guys can see, price comes down, boom, and there it is. Gives us a reaction right here, and then it starts to go higher. So that is how the trade kind of played out. And if we keep playing, right here, price came back for a retracement. But notice, price came back for a retracement. But notice what happened. It did not make a new low from here. So what does that do? That makes it possible for this low to now be an intermediate low. And if that becomes an intermediate low, this will then make this low a long-term low. So look at what happens after the next two candles. Boom. This is an intermediate low now, and this becomes a long-term. Why did this become intermediate? Because we had another short-term low to the right of it, making this a long-term low. And at that point, I was very, very confident about that low holding and the market going up to the going up and pretty much going above these highs right here. But my targets, I will show you guys the different targets that I had. If we go back to hourly time frame, and if I put on the liquidity pool indicator, you guys will see. Let's move this out of the way. You guys will see my targets. Every single target that I have is always within the ADR. So for today, the ADR was 2.99%. So I knew that every target that I have had to be within from my entry up to this line right here, which is the ADR high. So one of the targets was these highs right here. Then my second target was this high right here, which is where I ended up taking profit. And I will show you guys why I did that. My third target was this high right here, which was also the previous week's high. And then eventually my fourth target would have been this high in the ADR right here, which is pretty much around the same level, right? So let's go back to the 5 minutes now that you guys understand the different targets that I had for that specific trade. And let's keep playing. You guys will see price kept playing around a little bit, played around, retested my entry, and then started to go higher, and boom, it smashed to the first target. So I knew there was no risk of it reversing from that area. So I stayed in on the trade, and boom, 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 price starts to play around again, and then we get another move up, and boom, there it is. We take out that high. Now, why did I get out at that price point? Well, I saw on the order flow that there was a lot of buyers stepping in here, and I was afraid that these buyers could actually end up being trapped. And to add to that, I was looking at Ethereum at the same time, and as you guys can see, at the same exact time, Ethereum was unable to go above the European session high. So if we cannot cross above the European session high on Ethereum, and BTC is raging above it, the odds are at some point we're going to have a major retracement, if not an actual high. So that made me want to take profit on that trade. And as you guys can see, if I go back, now the replay tool is all messed up because I switched the asset, but you guys can still see it right here. We retrace as price was retracing down here. That is when I took profit right around here for 3.27R. And you can see we've had a massive retracement from that price point, okay? And right here, this is something that we have to think about, because if I was in on this trade as the retracement was happening, look at what would have happened. I would have went from 3.27R all the way down to 1.20 something Rs. Now think about this. Maybe I would have taken profit near the low right here. Maybe I would have gotten scared from this retracement and I would have taken profit, right? We don't know what could have happened. And then I would have been extremely pissed because afterwards price actually went all the way up here. So I'm very, very happy with how I managed the trade, with where I took profit, where I entered, and how I managed the overall trade. I did not react emotionally. There was no emotional decision. All the decisions that were made logically. And again, like I said, I use a very, very small risk on that trade because of what I saw from the order flow. Okay, so these are the reasons why I entered, how I managed, and why I exited. Now, what are the key takeaways from that trade? So let's go ahead and look at the different takeaways. So key takeaways. And we're going to go with, I have the takeaways written down, guys. I'm just copying the information and then I will paste it on this chart. So right here, and I can come in and boom. So key takeaways. Number one, the order flow is not always going to look perfect. So sometimes you're going to look at the order flow. And for those of you that have already traded order flow, you know what it looks like. You've used it in the past. You know that it doesn't always look exactly the same. And sometimes things are not always 100% clear. So when that happens, the best thing to do is to lower your risk, because what that does is that protects you from both potential worst case scenarios, because there's two worst case scenarios when you see a trade like this with an order flow that does not look exactly the way you want it. The first worst case scenario is that you don't take the trade and it ends up playing out like this. Then you're pissed because you missed out on a trade. The second worst case scenario is if you do actually take the trade, but then you get stopped out. Now you feel stupid because you took a trade when things weren't exactly picture perfect. So the way to mitigate both of these downsides is to take the trade with a smaller risk. That allows you to, one, be in if the trade does play out properly, and number two, if the trade does not play out, at least you did not lose your full risk, right? So for example, if your full risk is 0.5% and you decided to go with 0.25 or 0.13 instead of that 0.5, even if you were to lose, at least you did not lose a full R. So that's kind of a way that you can use to mitigate both potential downsides. So that was takeaway number one. Taking the trade anyway if the order flow does not look perfect, just lower your risk. Now, takeaway number two is to watch correlated markets for clues. So I showed you guys how watching the correlated Ethereum market allowed me to, one, have more confidence to take the trade, although the order flow did not look exactly as I wanted it to look. And number two, it also allowed me to have a good exit point. Now, I did not catch the exact high of the day, but you don't need to do that, right? You don't need to be in at the exact low and out at the exact high. You need to get your expected risk to reward, or something that makes sense based on the order flow. So for example, here, the expected risk to reward, that the target, I would say not expected, the target risk to reward that we want every single week is 4R. Now, on the day before a holiday, I'm out here catching a trade for 3 point something R. That's good enough for the week that I can maybe not trade again for the week, or if I do, I don't need to catch a big ass move anymore to hit my target of 4R, right? So that is how this can help you, right? In this scenario, it helped me get out right here because I saw that Ethereum was not able to continue above the European high, while Bitcoin was making new daily highs. So that is something to look at, both the entry and the exit. The correlation with the correlated markets definitely helped for this specific trade. So with that said, guys, I know today is July 3rd. It is Independence Day in the US tomorrow on July 4th. So if you are in the US, if you celebrate Independence Day, happy July 4th to you. And hopefully you guys have a lot of fun tomorrow with your families and friends, etc. And I will see you guys in the next video. Peace.